There's a company that can single-handedly influence a nation's economic trajectory while controlling a pivotal choke point in the AI hardware ecosystem. It's not Apple. It's not Nvidia. It's Samsung. In 2024, Bloomberg Economics projected that Samsung could drive nearly half of South Korea's GDP growth for the year. Fast forward to mid-2025, and the conglomerate's influence remains undiminished, with its semiconductor division alone contributing to over 21% of Korea's exports in the first half of the year. This is the scale of Samsung's story, a behemoth shaping global tech dynamics. Chapter 1. Origin Story. Noodles, Dried Fish, and Unyielding Ambition. Samsung's humble beginnings trace back to 1938 in Daegu, South Korea, as a modest trading firm, Samsung Sangho, peddling noodles and dried fish. Under founder Lee Byung-chul's visionary leadership, it evolved beyond commodities into textiles, insurance, and retail before pivoting to electronics. Lee wasn't merely building a business, he was engineering a scalable empire, one that would eventually command a market capitalization exceeding $400 billion by September 2025. Chapter 2. The Transformation. Change Everything. By 1993, Chairman Lee Kun-hee convened Samsung's top executives in Frankfurt and issued a clarion call: change everything except your wife and children. This wasn't hollow rhetoric, it was a cultural mandate to shift from quantity-driven production to uncompromising quality. The directive ignited a profound overhaul, embedding innovation and excellence into the company's DNA. The transformation culminated in the infamous 1995 bonfire at the Gumi factory, where 150,000 defective mobile phones, valued at approximately $50 million, were torched in front of thousands of employees. This visceral act wasn't performative, it seared the ethos of defect equals disgrace into Samsung's organizational fabric, fostering a resilience that has propelled it through multiple industry cycles. Chapter 3. The Technical Core, Memory, Foundry, and Displays. Memory. From DRAM to HBM, the AI enabler. In the AI gold rush, GPUs may be the picks, but high-bandwidth memory, HBM, is the indispensable shovel. Samsung's HBM odyssey has been marked by challenges and triumphs. In 2024, early HBM3 and HBM3E variants faltered in NVIDIA's rigorous thermal and power tests. However, by mid-2025, Samsung achieved a breakthrough. Its 8-high HBM3E passed muster, followed by the critical 12-high HBM3E qualification for NVIDIA's supply in September 2025. This milestone positions Samsung to ramp up deliveries, though SK Hynix maintains a lead with HBM4 preparations slated for NVIDIA's Rubin platform. The true competitive moat? Not just fabrication, but securing customer qualifications amid a market where HBM demand is projected to grow 60% annually through 2027, per industry analysts. Samsung's wins extend beyond NVIDIA. By June 2025, AMD integrated Samsung's HBM3E into its MI350 accelerators, alongside Micron, while Broadcom also granted qualifications. These partnerships, though smaller in volume, bolster credibility and generate vital cash flows. As of Q2 2025, Samsung held a commanding 39% share in the global DRAM market, underscoring its dominance in memory semiconductors. Foundry. Bold bets on GAA and US expansion. Samsung's foundry ambitions hinge on gate-all-around, GAA, transistors and advanced packaging. In the US, the company secured up to $6.4 billion in CHIPS Act funding to construct 2 fabs, a packaging facility, and an R&D center in Taylor, Texas, supplemented by a $250 million state grant in 2025. This investment aims to disrupt TSMC's hegemony, with the global semiconductor foundry market expected to reach $157 billion in 2025. While yield stabilization remains key, these facilities could enhance unit economics and geopolitical diversification by 2026. Displays. The steady cash generator. Often overshadowed, Samsung Display has dominated the global TV market for 19 consecutive years, capturing a 28.3% share in 2024 and maintaining momentum into 2025 with innovative OLED and QLED technologies. It supplies premium OLED panels to Apple, poised to retain a significant portion as iPhones transition fully to OLED. This segment not only funds riskier ventures but also fortifies brand loyalty in consumer electronics. Chapter 4: Finance and Capital Allocation. Discipline amid volatility. The semiconductor sector is notoriously cyclical, swinging between booms and busts. Samsung counters this with a disciplined, rules-based approach to shareholder returns. For 2024 to 2026, it pledged to distribute 50% of free cash flow, maintain an annual regular dividend of 9.8 trillion Korean won, and evaluate surplus for early payouts. In Q2 2025, despite a 56% drop in operating profit to 4.7 trillion Korean won, driven by HBM delays and US-China trade tensions, revenue reached 74.6 trillion Korean won, reflecting resilience in diversified operations. This strategy mitigates valuation discounts, appealing to investors in a sector where EBITDA multiples can fluctuate wildly. Chapter 5: Samsung's Macro Impact on Korea. Samsung transcends corporate boundaries, it's a macroeconomic bellwether. By 2025, foreign ownership surpassed 50%, signaling global investors' use of Samsung as a proxy for Korean market sentiment. Its weight in the Kospi index amplifies this effect. When Samsung falters, the broader market struggles. Semiconductors accounted for 21% of Korea's 2024 exports, a figure that rose to 23% in H1 2025 amid AI-driven demand, breathing life into the national economy. Chapter 6: Lesser-known insights. Samsung C&T is the nerve center. The chaeble's de facto holding entity isn't Samsung Electronics but Samsung C&T, where Lee Jae-yong and affiliates hold about 36% as of March 2025. Mastering C&T unlocks the intricate web of group interdependencies. Robotics ambitions accelerate. In December 2024, Samsung acquired a controlling stake in Rainbow Robotics, elevating it to a subsidiary with a 35% ownership by mid-2025. Further, in June 2025, Samsung invested $10 million in skilled AI alongside NVIDIA's $25 million, targeting advanced robotics software for the post-smartphone era. The bonfire's enduring legacy, reiterating the 1995 event, incinerating flawed inventory wasn't folklore. It forged a culture of relentless improvement, enabling Samsung to navigate yield challenges that cripple lesser competitors. Chapter 7: The Uncomfortable Reality, When AI Winds Shift. Even amid the AI surge, Samsung endured setbacks. Q2 2025 guidance revealed a 56% operating profit plunge, attributed to HBM qualification delays and export hurdles. Yet, the memory business's asymmetry offers hope. A single quarter's certification win can trigger rapid profit rebounds, as evidenced by past cycles where margins expanded from single digits to over 40%. Chapter 8: Policy Headwinds, China, Licenses, and Geopolitical Risks. Samsung and SK Hynix's Chinese fabs have long relied on U.S. tool waivers. By late 2025, these were revoked, replaced by annual site licenses that permit maintenance but scrutinize expansions. This uncertainty funnels more capex toward U.S. and Korean sites, amid a broader chip war where U.S. restrictions curtailed AI chip sales to China, impacting Q2 earnings. Chapter 9: Samsung's Global Stature, the AI Hardware, Number 2 Enabler. NVIDIA sparks AI demand, but scaling depends on memory bandwidth, packaging, and supply resilience. Samsung intersects all, accelerating HBM and packaging in Korea and Texas, leveraging a manufacturing juggernaut for yield optimization, and integrating AI across displays, sensors, and devices. This interconnectivity cements Samsung as the linchpin in Korea risk, not always victorious but perpetually influential. Chapter 10: Broader Implications Beyond Korea. For the U.S., Samsung's Texas hub represents more than subsidies. It's a hedge against supply disruptions in an AI landscape where demand outpaces legacy nodes. In Asia, Samsung's HBM evolution will dictate DRAM pricing and data center efficiency. HBM4's projected 20–30% energy savings could redefine power economics. Investors face quarterly volatility from qualifications and policies, but the long-term thesis endures. Can Samsung harness its manufacturing prowess for sustained HBM and foundry resurgence? With a 39% DRAM market share and robotics forays signaling diversification, the odds favor yes. Chapter 11. Emerging Frontiers: AI Integration and Sustainability. As Samsung navigates the AI era, its integration of artificial intelligence across product lines is accelerating. In 2025, the company unveiled enhanced Galaxy AI features in its S25 series, leveraging on-device processing for privacy-focused tasks like real-time translation and photo editing, powered by proprietary Exynos chips. This move not only boosted smartphone shipments by 12% year-over-year in Q2 but also positioned Samsung to capture 22% of the global foldable market, where it holds a 45% share amid rising demand for innovative form factors. Sustainability emerges as another pillar. Samsung committed to 100% renewable energy in its US and European operations by 2025, achieving 92% by mid-year, while investing 7 trillion Korean won in eco-friendly semiconductor processes to reduce water usage by 30% in fabs. Data from its 2025 sustainability report highlights a 15% drop in greenhouse gas emissions compared to 2024, aligning with global ESG mandates and appealing to institutional investors who now hold 55% of shares. In semiconductors, beyond HBM, Samsung's image sensors and logic chips are gaining traction. The company's 2nm GAA process, set for pilot production in late 2025, promises 25% better power efficiency than predecessors, attracting clients like Qualcomm. Financially, despite Q2 headwinds, analysts forecast a 2025 full-year revenue of 300 trillion Korean won, up 15% from 2024, driven by AI tailwinds. Robotics investments underscore forward-thinking diversification. The Rainbow Robotics subsidiary is developing humanoid bots for manufacturing, with prototypes demonstrating 20% faster assembly times. Paired with the skilled AI stake, this could tap a robotics market projected to hit $210 billion by 2030. From dried fish trader to AI infrastructure linchpin, Samsung's prowess lies in transforming a colossal organization into a precision machine that thrives under pressure. Stay curious, stay sharp.